So the RBA recently left the rates on hold, and they're actually predicting that rates will drop at least 2 times this year in 2024. Now, I was recently interviewed by Chris O'Keefe on 2GB, and I'm going to play that interview for you because in that interview, I'm going to explain exactly what's going to happen to the property market in 2024. But watch out, we are going to see a mega boom like you've never seen before in the Australian property market in 2024, and there will be a number of suburbs that will grow by between $100,000 and $200,000 over the next 1 to 2 years. But check out my interview with Chris to get more information. Let's run that right now.
You've got the big four, you've got markets, you've got everybody who are saying interest rates will be cut at some point this year. So what does that mean for real estate across this country? Well, let's get some reaction with Scott Kuru. He is the founder and CEO of Freedom Property Investors and a proud sponsor here on 2GB Drive. Scott, g'day.
G'day, Chris. Yeah, I was listening to that. I applaud the RBA, for trying to have a dialogue with us. It was pretty boring, though. Having said that, the fact that they're putting those forecasts in there, at least we know directionally where they're going. But I've got some interesting numbers, right, to share with your audience, Chris. So first thing that a lot of people may not know, there were actually 20,000 Aussies that applied for finance for an investment property in December. 20,000 in 1 month. And that makes up about 40% of all home loans applied for in December. So that's telling you something. Investors are making huge moves. Now, I'm expecting the January numbers, it could be that out of all lending, 50% of all lending will be people getting pre-approvals to buy an investment property. So I think 2024 is the year of the investor. First-time buyers are going to find it very hard to get in. I'm predicting that the government is going to come out with more help for first-home buyers in the lead up to an election to get more votes and help more Aussies into their first home, which is a good thing. So look out for that this year. And the other thing that I will absolutely tell you is that there are 15,000 suburbs in Australia. There will be some suburbs that lose and go down. There'll be some suburbs that sit where they are right now. But there are suburbs that are going to grow 20, maybe even 30% in growth. So investors definitely can make some money this year.
I noticed the Fin Review published a report yesterday from CoreLogic that said house prices could rise 10% nationally this year. Do you think that's out of the equation?
I don't think that it is. I think that's on the high side. But will there be some suburbs that do grow 10, 20, even 30%? There will be. Will there be some suburbs that actually go backwards? But let's just a couple of other stats for your audience, Chris. So we need to be building, and the government has said this, 240,000 homes a year to keep up, to ease the pressures, ease the prices. Now, we only had approvals last year for about 160,000 homes to be built. Now, that's an approval, not a completion. So depending on finance and if people go ahead, normally only about 70% of those will go ahead. So that's only another 150,000 to the housing supply. And if you look at the budget papers on immigration, they're still forecasting 250,000 new migrants into the country every year. We only did 160,000 homes last year. This year, it's going to be around about the same. So the supply and demand, there's still going to be enormous pressure for house prices to grow. In Sydney, the auction clearance rates just in the last week was on fire. It was 70%. Pretty much everything that's going into auction is selling. So you might see 2, 3, 4% of price growth in Sydney just in the next 2 months.
Sure. Before I let you go, Scott, negative gearing. There's a bit of chat around whether or not the federal government, Albanese and co, will fiddle with negative gearing. What's your view on that?
Okay, what I will say is this is a little economics lessons for everyone. Everything balances out in the economy no matter what the government does. Let's say the government does pull the negative gearing out. Well, no one's going to invest in property unless they can get a certain return. So what will happen is it'll just recalibrate that profit or that money or that cash flow that's being lost in tax savings through negative gearing will be made up somewhere else, probably through increased rents. So the worst thing, I think, that the Labor government could ever do would be to remove negative gearing because, number one, there's about 3 million Aussies that invest in property, and I feel like they lost the election to 2019 because they spoke about removing negative gearing. So I think it's highly unlikely that they'll do that, although there'll be a lot of pressure from the Greens to get rid of it. But if they do get rid of it, who are the people building all the brand new property and adding to the housing supply? It's predominantly investors doing that. So they're going to take away the incentives for new housing supply to come onto the market. It's a really stupid thing to do.
Scott, I really appreciate your time. Good on you.
No worries. Cheers, Chris.
Scott Kuru, founder and CEO of Freedom Property Investors.
For more videos like this, please click like and subscribe for more information around the property market.